Good afternoon. The U.S. Fed has raised its interest rate by 25 basis points. It announced a baby step at the first meeting of 2023, slowing down the pace from last year's giant and big steps. But it hinted a few more rate hikes to come. Our Shin Se-byuk has this report.
The Federal Reserve has once again slowed its target interest rate increase as it raised policy rates by 0.25 percentage point on Wednesday. But it hinted at further hikes to come.
Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
The baby step hike matches market expectations. Last year alone, the Fed increased policy rates 7 times, making it the fastest increase since the 1980s. Accordingly, the U.S. benchmark interest rate jumped to a range of 4.5 to 4.75%. The Fed's latest decision comes amid two encouraging wage growth and inflation trends in the U.S. late last year, after inflation soared to 9.1% in June, a level not seen in over 40 years. After taking 4 consecutive giant steps of 75 basis point rate hikes from June to November last year, the Fed slowed the pace to 50 last month. Still, Fed officials signaled there's still a long way to combat inflation.
While recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path.
The latest statement assessed the current inflation situation as eased but still elevated. Powell also warned that the job is not fully done, as he said he doesn't expect rate cuts this year. As for the interest rate gap between South Korea and the United States, with Wednesday's announcement, the interest rate gap between the two countries widened to as much as 1.25 percentage points, the widest since October 2000. South Korea's interest rates had been higher than the U.S. from early 2020 until July last year. Since then, South Korea has steadily hiked key interest rates, but watchers point out that the rate is still far too low. Lower interest rates could result in a loss of investors to overseas markets, as well as a depreciating currency, eventually making inflation worse. Meanwhile, to reach the Fed's terminal rate of 5.1% for 2023, it is widely expected that the Fed will take at least 2 more baby steps this year. Shin Se-byuk, Arirang News.